Hey everyone, welcome back to our news trading session. We're going to be trading the CPI live, and hopefully, hopefully we're going to get some volatility today, and I think we should. But yeah, let me know if the audio coming through okay. It should be coming through okay from my side. Okay, let's get this started. Welcome back to our news trading session number 3, and this is going to be our CPI night. My name is Vito in general. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to high trading risk and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. Let me bring the volume up a little bit. See if I can bring that gain up. Okay. All right. And I've been a full-time trader with over 20 years of experience, professional trading coach and technical analyst since 2007. My expertise is in the Ichimoku Kinko Hill technique. I think there was a question about this yesterday. What do I use to look at the market? I use Ichimoku Kinko Hill. And I've been invited as a guest speaker at Training Investing Expo across Australia, where I'm based at Invest Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association. All right. Hello there in India. Okay. So as per usual, I'm going to show you the code, and I'll be sure to give you the right code because I think I gave you guys the wrong code last Friday. But yeah, you can use the code to double your deposit bonus. It's a 100% deposit bonus there. And you should have access to the private Telegram channel if you have attended the previous sessions or you registered through the emails. Through the website, you should be receiving that on the email. If not, please contact customer service. I'm more than happy to add you into the Telegram channel itself. Okay, so this is the code. It's not from 2025. It is valid until the 31st of December 2025. I believe this is a one-use code. For the past 2 years, I thought it was something that you can keep using, but I think it's just a one-time use code for every single client. But save it up just in case if you want to deposit. I could be wrong, right? I could be wrong. But yeah, this is one of the codes there to double your deposit. It is going to be non-farm 2025, so make sure you use the code when depositing into your Octa trading account. Okay, so we'll go through some theory first, and we need to go through very quickly because I think we started a little bit late in the session, and the session is actually in English. It's not in Hindi. It says that in English, but yeah. So yeah, hopefully there's going to be a session in Hindi, but it's definitely not going to be from me because I don't speak Hindi at all. But yeah, feel free to tune in if you want to, but this is going to be in English. All right, so we'll go through some theories first, and then I want to talk about the context on what we're looking at and in terms of what's really going on in the market as well. A lot of stuff has been going on in the market, especially the past 2 months, actually. Ever since Trump's inauguration, that'll be very soon. In 7 days' time, it'll be 2 months' time. There's a lot of chaos in the market there, and it kind of intensifies the past 2 weeks. So there's a lot to talk about in terms of the context of what we're anticipating tonight. Okay, so let's talk about inflation first. So what is inflation? Inflation is the rate at which prices for goods and services rise. And the most commonly used inflation index are going to be the CPI, or the Consumer Price Index, and as well as the core inflation or the core CPI numbers. Now, when we talk about inflation here, it's something that happens every year, right? It gets added up every year. When we look at the inflation number, the year-on-year growth, the year-on-year CPI numbers, that's basically how inflation adds up every single year. And when we look at 3%, for example, it means every year prices of stuff just goes up by about 3% on average, right? It is an index, so not all prices are going to go up 3%, but the average for all the items there is basically going to be about 3%. And Now, if we take a look at the CPI, the breakdown itself, what is the CPI? It basically measures your cost of living. So obviously this includes broad range of goods and services purchased by consumer. And when we talk about the stuff here, these are going to be your basic necessities, right? The other thing that CPI measures is actually the standard of living. So the higher the inflation is, the logic behind it is the standard of living goes up with it as well, because things are more expensive in first world countries compared to, let's say, a developing nations, right? And that's basically what the CPI, it basically measures, how much are your basic necessities, like your soap, your shampoo, your food, your, I don't know, depending on your region, you might be eating bread, you might be eating rice. In Asia, obviously, everyone is eating rice, so rice price, rice prices is a huge part of the CPI for Asian countries. But again, it's going to differ from country to country. But CPI, we're basically looking at consumer products that we buy. All right. So if the CPI goes up, the logic behind that is that the cost of living goes up with it as well, and obviously it's good and bad at the same time. If the country doesn't have a good inflation, then it will be like Japan, right? Where it goes into a deflation, it's actually very hard for it to grow in terms of GDP growth. So CPI, it's not all that bad. Inflation is actually not all that bad, because we kind of need that for growth as well. Now, CPI also includes international personal consumption items. So if you're importing stuff, that would be part of the CPI numbers. The scope excludes changes in interest rates or costs. Now, why is the inflation number important? Because if the inflation goes up, basically central banks they need to adjust their monetary policy. With central banks, especially in the US, they have a dual mandate. Number one is actually to bring in price stability. The other two is actually to maximize their labor market. So when we talk about price stability there, it's basically to control inflation. There are going to be target bands, and generally for inflation, not just in the US, but pretty much every other nations out there, there's a benchmark where every nation is actually aiming for 2% to 3% inflation growth. This is, from theory perspective, from an economic perspective, this is basically the perfect amount of inflation that's necessary for the GDP to actually grow as well. So inflation needs to be controlled. It basically has the target band, which is at 2% to 3%. And the goal for central banks are basically to maintain inflation within this bands, right? It's the 2% to 3% target band. So that's inflation. And obviously, if inflation is high, central bank needs to put interest rate up. And the reason for that is to control spending. Okay, the more people spend, the higher the faster the inflation is actually going to grow. So by controlling the interest rates, they're basically telling people, okay, if interest rate is high, try not to borrow money from the banks and try not to spend. The goal is for you to save. That means you slow down the economy, and that would bring inflation down. Okay, so hiking interest rates, it actually slows down the economic growth. It actually slows down the economy. It's basically putting a brake on the economy by basically saying, okay, you're growing too fast, inflation is going too fast. We need to kind of slow down a little bit. And that's the purpose of the interest rate hikes, okay? And if the economy is slowing down too much, inflation is coming off too quickly, then they need to they need to start cutting interest rates to make people spend more to maintain that growth. So it is actually a very fine balance in terms of what the CPI is, and this is the reason why this is a very important metrics when it comes to the fundamentals on a lot of stuff. Now tomorrow we're going to be getting the PPI numbers. The PPI is actually on the producer side. So the PPI is the producer's price index. It measures the real growth in output. It includes items produced for personal consumption. It doesn't include imports, and it encompasses services with prices including an interest rate component. Okay, so that's basically what the inflation numbers that we are looking at. So what is core inflation? I need to go through this very quickly. Core inflation is basically just inflation number excluding core inflation or core CPI. It's basically the CPI numbers excluding fresh produce, and this is, some foods are going to be excluded. Those are going to be your fresh produce because it's going to be seasonal. For example, if there's a cyclone, if there's a prolonged drought in the country, it might affect fresh produce, right, in terms of the harvest and whatnot. And the energy sectors are going to be excluded because it's volatile. Prices of electricity could go up. For example, Canada is about to impose a 25% tariff, and then they canceled it out yesterday to the US. That could actually push energy prices up as well. So these are volatile factors, right? Oil prices, they're going to be excluded from the core CPI. Basically, if we exclude all these volatile items, we are going to get what we call the core inflation, or basically underlying inflation there. So this metric is actually what the central banks are looking at. This is what they're referring to when they talk about the target bands. It is actually the core inflation that they need to control, right? Because it's going to exclude all the volatile items out there. Okay. All right, so very quickly, we're done with the theory. It's a very simple thing with inflation. It's not like the employment numbers where we have to take a look at a lot of data. Inflation, it is what it is, right? If you have any questions regarding the inflation numbers, then feel free to ask me about what inflation is. But this is going to be the number that we are eyeing for tonight. And if we take a look at this, the core inflation. Sorry, let's start with headline inflation first. Headline inflation, we're expecting headline inflation to drop from 3% to 2.9%. And, some of the forecasts, I think the consensus on the surveys here, some analysts were actually looking at 2.8%, and even one that's looking for 2.7%. But the general consensus here is that we're anticipating inflation number to go down from 3% to 2.9%. Rate of change per month, that's expected to go down from 0.5 to 0.3%. I think this is stable at 0.3%. Is actually not that huge of a surprise if we see a monthly growth at 0.3%. I think it's pretty okay. The core inflation, this is where the consensus and the forecast kind of differs a lot, right? We're still expecting the core inflation to drop down, and we might get 3.2, we might get 3.1%. Anything lower than 3%, I think that's going to be a huge boost for the market at this point in time. It might move differently compared to all the other inflation numbers, because right now, I think because of Trump's and the tariff war and the trade war, there's a lot of concern in terms of whether or not the US economy could actually slow down and fall into a recession. Personally, I don't think that's going to be the case. A lot of experts are looking at that and say, there might be a chance, or at least we should bring up the talk about recession there. But the current economic condition is not actually recessionary, okay? So we are actually not close to that. But the concern that the market has is if Trump's kind of act up as he is right now, it could lead to a lot of confusion in the market. And if the tariff war continues like this, where he's just gonna reciprocate on anything, then it would actually be pretty damaging to the economy. But not now. We're probably going to be looking at least, it's about 6 to 9 months window before we actually see any signs of recession. So, if the economy in the US is actually going to slow down, it's not going to slow down immediately, but I think the market is already preparing for that. And you can see what's going on in the equity market. And I think one of the worst performing stocks at this point in time is Tesla, obviously, because, with how Musk is so close to Trump right now, I think there's a lot of negative kickback on Tesla at this point in time. And Tesla is not, I think from a PE ratio, Tesla's PE ratio, I think it's about 80 or something like that, which doesn't make sense anyway to begin with. Okay, so we are looking at adjustments in the market. Now, the numbers tonight, if we get inflation numbers below the consensus at 2.8%, it will actually boost the US stock market. So if you're looking at that, that would actually bring in positive sentiments in the market. Because right now, market is pricing in for a June rate cut from the FOMC, and if we get that lower inflation number, that's what the market needs right now. You know, an extra confirmation that yes, the market is slowing down, the FOMC needs to start cutting interest rates, and you know, despite all these tariff talks and whatnot. But yeah, if the inflation goes down very quickly, but if the inflation number comes in higher than 2.9, for example, it stays at 3%, or maybe even ticks up a little bit at 3.1%, then we might actually see a stock market crash tonight, and that would have an impact on the US dollar itself, because the correlation that we have here with the US dollar, it's actually not a normal correlation. The correlation right now is that the US dollar is coming down with the US stock market, and that's not normal, and the yields is also coming down. I think this is all about the negative talks about the US economy. I think this is the concern that the market has. Now, the core inflation as well, if it ticks up to 3.4%, it could actually damage the US dollar itself. So what I'm trying to say is, if you're looking at it from a Forex perspective, if we get an inflation number that is actually lower, that could actually be good news for the market. We could actually see the US dollar strengthen. So we might see a little bit of a different scenario. I don't know what it is going to be, because the past 2 weeks, the correlations are all off. So, you know, anything goes for tonight. But yeah, I think for tonight, if we get a low number, which is not, I think the US is looking for that. In the context is that, okay, a number below consensus at this point in time could actually be beneficial for the risk market, i.e., it could push the stock market up. I don't know what the impact is on the US dollar, but we should have an immediate reaction to that. Okay. Dorian has a gap in 5 minutes before. So yeah, we will start looking at that. Okay, so we got 5 minutes and we want to start looking into that. Let me just check the Dorian if there's actually any gap on the 5 minute time frame. I don't think there's actually a gap on the 5 minute time frame. But yeah, not all of this can actually be traded with a straddle. The sterling, I think this is okay for a straddle. It is a little bit huge in terms of range though, so just be mindful. And for the buy stop, and on this one here, we need it to be at least 1.2975. I'm giving it a little bit more room because we didn't see any volatility last Friday. It could be a lot of fears are probably going to be waiting for the volatility today. This one here, it's actually pretty huge. So I'm just going to give you a little bit of a warning here that the range of volatility that we have here is about 75 pips on the sterling here. So it's actually pretty huge. Unless you're trading on a 15-minute time frame or the 5-minute time frame, 15-minute time frame is still going to give you the same range of volatility. The 5-minute time frame is probably going to be different. All right, so I'm going to be using the hourly, and numbers going to be released in 4 minutes time. On the Euro USD, I think we can go a little bit lower here, and for the buy stop, you can have it at 1.0930. I would like it at 1.0950. That's basically the top that we have here. And for the sell stop, I do want to have it at 1.0875. Just a little bit lower. I don't want to get whipsawed tonight. So pound USD and Euro USD, you can actually straddle this. The dollar yen, this is not, you're not able to straddle the dollar yen. We'll take a look at this one here if it does break support trend line. But there is a support trend line that we have here that, it could hold or not. We don't know. But Aussie USD, this one is all right in terms of the buy stop. You can have it slightly above 63.15. That should be okay. And for the sell stop, you can have it about 62.60 or 62.50. It's up to you. But I think about 62.60 is about right for the sell stop. Now, range are going to be huge. So I think you're expecting a potentially huge whipsaw in the market here. So just be mindful of that. New Zealand USD, you can do a buy stop on this one here. I want to have it at 57.30. That's completely fine. And for the sell stop, I do want to have it a little bit lower, right? Probably going to be lower, about 56.90 at this point in time. That would be on. So we already got 4. Dollar CAD, it's probably a skip on the Dollar CAD. Dollar Swiss as well. I don't think you can straddle Dollar Swiss at this point in time. But yeah, we'll take a look at that. Gold, you can straddle this, but I would be mindful about gold in terms of direction. I don't know what the impact is on inflation for gold, I'll be honest with you guys. The NASDAQ and the US 30, we'll take a look at this one after the data gets released. A gap on 5 minutes before. Anyway, dollar yen, I'm just waiting for a breakout. We're not going to be straddling the dollar yen here. So sterling, euro, we can straddle it. Just keep in mind the range is actually pretty huge between the buy stops and the sell stops. So just be mindful of that. We got about 2 minutes. We might be able to straddle dollar Swiss. It is going to be a very tight range on the dollar Swiss, but we might be able to straddle this one here. I do want to have it a little bit higher at 88.50. Just give it a little bit more space. And for the sell stop, I want to have it at 88, just in case. I'm actually giving it a huge range here, about 50 on the dollar Swiss, just in case. I don't want to get taken out on both sides. Then it'll be problematic for us here tonight. I think that's a lot of trades. We got Aussie, we got Euro, we got Pound, New Zealand, Dollar Swiss. We're just waiting for the numbers to kick in about a minute's time. It should be about now, about 30 seconds. Numbers going to get released, and we'll see what the numbers is going to be. Yeah, hopefully it does have a clear direction. Hopefully it doesn't get whipsawed. Hopefully it goes in one direction, and that's the whole goal, right? We want to see a clear sign of what the inflation number is and whether or not the equity market is actually salvage. We're actually able to see a little bit of a bounce up. All right, it pushes up. I think it triggers a lot of the buy stops here. Everything else, yeah, I think we can close that. All right, let's see. Yeah, everything else there. So I need to close the sell stop, I would guess. So I don't get whipsawed. And let's take a look at the numbers. What is the numbers here? New site crashes on me. Inflation, it's lower, 2.8%, which is, I think it's good. We should probably take a look at the equity market first. It's probably going to react positively as I kind of suspected. But yeah, we'll see how long it's actually going to last. But everything else, it's going up. US dollar is getting pressured lower at this point in time. And dollar index is getting pushed lower as well. So that's okay. I think that's a pretty normal reaction. But what I'm afraid of is the US dollar could actually get stronger. We didn't get whipsawed, so that's fine in terms of directional bounces. Yeah, as I said, the dollar yen is pushing up. So what I'm afraid of is this could actually be positive for the US dollar. And we'll see what happens in the next 5 minutes and make the decision on that one there. I think we got filled in a little bit higher than where price was. That's pretty okay. I know liquidity dries up as well at times like this, but yeah, we didn't get filled in at a very good price for pound. I think we got put in a lot higher than where the market was. But yeah, New Zealand USD, same thing. Dollar Canadian is pushing down lower. Dollar Swiss, we triggered a sell. Gold is stable. I'm not looking at any movement in gold. NASDAQ and the US 30 is attempting to push higher, but we're not looking at any significant move at this point in time. So let's see what happens here. But we need to start placing our stop losses. A loss is a loss, but yeah, if it does come back down and go to the other direction, we actually want to close our position and let's see what happens here. But yeah, we need our stop loss at moments like this because market is pretty unclear. And if there's a whipsaw, the stop loss would have taken it out anyway. So my concern is it could actually be positive for the US dollar, but we're looking at the breakdown on the inflation number here. Core inflation, it's also down at 3.1%. That's lower than consensus as well. Changes per month for core inflation is also down below consensus 0.2, and the CPI month on month is also down below consensus at 0.2%. So everything across the board is pretty much in one direction at this point in time, that we're looking at a softer inflation number here. Say I'm really concerned because I think the equity market is probably going to be looking at this, right? And because of the correlation that we have in the equity market and the US dollar for the past 2 weeks, if the equity market pushes up, it might take the US dollar up with it. But this is the initial reaction that we have here. It should be weaker for the US dollar, but I'm not sure whether or not that's actually sustainable and whether or not the US dollar could actually reverse and gain. For now, we're keeping the positions here that we have. Just make sure you have your stop loss on this one here, because I'm not really sure on the directional push at this point in time on the market here, especially on the US dollar. I need to check on yields as well. So I need to check on the 10-year Treasury yield. So we had that spike and the market just starts coming down. I think it spiked all the way up to 42,000. That was a 300 points push on the US 30. 10-year Treasury yield, this is what I'm afraid of. The 10-year Treasury yield might go up with the market because what we're looking at in the past 2 weeks is that we have that correlation between the equity market as well as the 10-year yield and the US dollar. So it could actually be beneficial for the US dollar. So I'm not sure whether or not we should actually hold our position here on a long on the pound USD and the euro USD and whatnot, because the US dollar could actually get stronger with the market here. So I would be very careful in terms of navigating this. And if we take a look at the movement here on the euro USD, we might actually see the euro USD getting pressured lower as well. So we'll see. We got our stop losses, so I'm not too concerned. At least there's a bit of volatility, yeah, at least there's that volatility. But the concern that I have is, again, as I said before the news gets released, if it's negative, it could actually be the good news that the US economy is going to be looking out for. So it could actually be beneficial for the US dollar. So we'll see. We'll see what the market reaction is. As I said, I'm not sure about the initial market reaction, but yeah, as you can see, we are, I don't think that was a good decision to go long on the pound and the euro. We'll see what happens here. If it pushes lower, we got our stop loss. I'm not too concerned at this point in time. But it is a huge move in the market. Remember, that was the 75 pip range on the sterling here and the euro. I think the market did push up a lot higher than what we were looking at. So we'll see. It was about 50 pips jump on the pound USD. Yeah, that's what I thought too. I thought I've been saying the sterling and the euro needs a deeper pullback, just not happening. And you guys probably saw that. I was talking about that since last week, that we were, I was actually starting to get bearish on the euro. And I think I mentioned this on the outlook there. The euro, in terms of the gain, the weekly gain was too high last week. It needs a little bit of a correction. It's not a normal market here. But yeah, it is what it is. I think market is just stuck as it is right now. I'm not looking at any significant move or anything like that. It's just coming back into the range. We did see a little bit of a spike there happening. Took out our order, but it doesn't go anywhere. Dow Canadian is probably the one that's consistent in terms of coming down. Gold is also not breaking out or anything like that, because if for gold, the range is basically this area here, and we're still there. Obviously, this extends all the way back there in terms of resistance. So we need to clear off a higher resistance at this point in time, about 2,935 to be sure. 2,935, yeah. Well, 2,935 if you round it up into a psychological number. That's basically something that gold needs to break for it to run to the upside, and I think it's actually really hard for this one to go short. All right. Yeah, I think that's a lot. I don't think the market is happy at this point in time. We're just not looking at risk coming back into the market. You can see the pullback here on the US 30. I think this is pretty obvious that the market is actually really concerned. Might see that push on Nasdaq. Bitcoin is pushing up a little bit, at least, but probably not going to be affected directly. Euro and sterling yen not really affected by this because they are cross currencies at this point in time. They're not going to be that effective. All right. This might actually hit our stop loss, and it's better than without a stop loss, but we'll see what happens here. If it hits, it hits. If it doesn't, it doesn't, right? If it hits the stop loss, it's not a good idea to just reverse the trade as well at this point in time. Because if you take a look at the lower inflation number here, they're all below consensus. And the logic here is that the equity market should be happy with it. And the risk sentiment should come back into the market, but we're not looking at that. We're just basically back to where before the news get released, right? This is 10 minutes in. So if we take a look at the 5-minute time frame, we're basically back within range again. This is basically the range, and we're back. It's pretty flat. No, we shouldn't buy. I don't think we should be buying at this point in time. As I say, the worst, it's not the worst, but what I suspect is the negative number could actually be good for the US dollar. It could boost the US dollar because of the correlation that we have here with the market here. I think Euro got stopped out. And if that's the case, I think we might just get out from the current positioning, and it's up to you. What do you want to do with it? It's not too far from where the stop loss is for the Aussie. It's like about 10 pips. New Zealand's about 10 pips as well. Sterling is actually pretty far. I might get out from sterling rather than getting dragged down even lower. But yeah, that's not good. We got stopped out on the euro, so obviously it's a failed trade on the straddle here. Again, that was a concern that I have. If we have that negative number on the inflation, that could actually be beneficial on the US dollar. So I'm actually going to close out all the positions first, and then we'll analyze properly and see whether or not we can trade after the news on this one here. Time to sell on equity. Let me just double check on everything else here. All right, so I say, the dollar index could actually be beneficial. It's not really bouncing off really strongly at this point in time, but the Euro USD, you can see that sell-off there. We're basically, is it a good idea buying it? It's below 1.09. I don't think it's a good idea to buy the Euro at this point in time. Selling it is also questionable because price is currently stuck where it is. So we basically, literally, within the 10 minutes that we have, we got whipsawed up and down, and market is just flat. Now, I think the euro and the pound could actually get weaker tonight. Okay, at least with that kind of candle close, and also where it got rejected just now, it was at resistance 1 on the daily pivot. Very close to 1.3. It's sad. I was kind of hoping that we hit 1.3. At least we can see a little bit of a liquidity sweep on that one here. But this one here is getting pressured lower. So we might actually go down, go short on this one here soon. But I would wait for a little bit. The 5-minute time frame, the Ichimoku, we're still above the Ichimoku cloud on the 5-minute time frame. So if you're thinking, okay, I want to go short on this one here, we basically need a close below the Ichimoku cloud. This on the 5-minute time frame on the sterling. The euro is already doing that, and I'm just not comfortable looking at this. I'll be honest with you, I'm not comfortable. I think there's a lot of confusion in the market here. Market is not going anywhere. We're basically back where we started just now, right? You can take a look at that. So that was the breakout that we have, and market is basically just there. We're not going anywhere. This is it, This is on the pound. Same thing on the euro. The euro is already pushing down lower at least. But yeah, we're back before the news gets released. So I think there's a lot of confusion in the market. I think a lot of traders are basically just going to be looking at this and trying to figure out what's going on here. Yeah, I think it needs a clear pullback. I do think it needs a clear pullback. The US 30, this is disastrous. All right, that kind of rejection on the US 30, I think we might actually see another meltdown in the equity market tonight. That was just crazy. Market just jumped up 200 points, 300 points on the US 30 on a 50-minute time frame, got rejected like that. This is crazy. And you see that kind of rejection there. It goes to show that I think there's still a lot of negative sentiment in the market. I think market is not convinced with what's going on here right now. But yeah, I think this is basically going to be it. VIX anticipated to open lower. VIX at 26. It's still high, right? Yesterday it was at 29, nearly 30 for VIX. 10-year yield is pushing up, so goes back to the concern I have. It might actually be beneficial for the US dollar here. So we'll see. All right, can we do something? What can we do here? Let's wait for 2 more minutes. At least a 15-minute time frame is going to close, and we're able to make a decision on that one there. But I think if we take a look at the rejections that we have here, that was just basically more of a sweep than anything else. It's not good, but hey, it happens, right? This is trading. So yeah, we got stopped out on the euro, and I decided to close on everything else rather than this one getting dragged down a little bit lower here. But this is the 15-minute time frame, and we'll see what happens. It's basically just within the range there. The Euro USD, at least on the early time frame, is still above the Ichimoku cloud. 15-minute time frame, it's already dropping below the Ichimoku cloud there. So we'll see what happens here. I think there's a pivot level that we need to keep an eye out on the Euro USD. The dollar yen just bounces off support. No point chasing the dollar yen at this point in time. We're very close to 149 already. So I'm not quite sure whether or not 149 is actually going to be enough to break the market or anything like that. The Aussie, I'm okay for a short on the Aussie. I think for the Aussie, I think we can do a sell stop on the Aussie. I still want to have my sell stop at 62.60, so I'm implementing sell stop at 62.60 for the Aussie. And New Zealand USD, I'm going to leave that alone. Dollar Canadian, no, I'm not touching dollar Canadian. Never liked it, and we'll see. Dollar Swiss, should we leave this alone or should we do a buy stop? I think we might be able to do a buy stop about 88.45 or 88.50. I think about 88.45 should be about right for dollar Swiss. Just in case. This two are just in case. Gold, unfortunately, it's not breaking out of the range. It's pretty stable as it is. It is stable. 29.25 is still capping the market at this point in time. Nasdaq US 30, expect another meltdown in the market. From what I can see, I think it's going to be another meltdown in the market. Pound USD, we might get in again if we get stronger confirmation on the 15 minutes or even the 5 minute time frame for any changes here. But we're still above the Ichimoku cloud. We'll see what happens here. 5 minutes still above the Ichimoku cloud. This one might push up. This one might, but it might just go to about 1.3 and then kind of fizzle out. It's just a resistance one there. It's really concerning. So it's not really breaking out of the range. I mean, with that kind of whipsaw, if I were to just go long again on this one here, I think it's a huge gamble, and I don't like gambling. I like calculated risk. I just can't calculate the risk on this one here, because if I were to go long and my stop loss is about 1.2925, my target is going to be at 1.3. Is that achievable? That's the question that we have here. Overall, I think market is basically just digesting what's going on here. Initial 15 minutes that we have here, I don't like it. That kind of spike in the market, it's not a good sign, and it makes it very hard for us to kind of make that decision to jump back into the market there, unless we have an early close at least. But yeah, I think the sterling might get stronger. The euro, I'm not sure. We are about pivot level on the euro here, so price could be very well bounces up, but I'm just not seeing the strength right now, because if it were to bounce back up, it should happen very quickly right now, and 5-minute time frame, we're just looking at a market that's really hesitant to kind of push up. I don't pray. When it comes to trade, I do pray, right? I'm very religious, if you guys don't know, but I don't like it when I have to resort to praying just to, trade, right? Again, that's basically just hoping for something to happen, a miracle to happen in the market. And I don't like that mentality when it comes to trading. We need to calculate our risk. We need to decide when to cut it off. We need to adapt. But yeah, don't get me wrong, I'm very religious, but when it comes to trading, I just don't like hoping. I need to know what my probability. Shall we wait for buying levels on gold? I think you should wait for a little bit on gold. We're not breaking out the range on gold, so just be clear. And we're basically just stuck on gold. So pivoting about 29.25, we're just not going anywhere. This is the condition on gold. And if we stay in this range here, we're not really going anywhere. And it needs to push higher than 29.25, at least on gold, right? At least you need half an hourly close about 29.25 if you want to buy. Or at least it comes back down to test 2,900 as a support. If it bounces, then you can buy, a little bit lower. But yeah, I'm not looking to sell gold or anything like that. You can buy it at a lower level if you want to, but not at the current price level. I don't think it makes sense. All right, you can buy it at closer to pivot, 2,905, or when it breaks the 29.25, then you can target 29.50. You're still going to be looking at a support at pivot 29.05. Your risk reward ratio still makes sense, but at the current price level, we're not going anywhere. Nasdaq 100 meltdown. Looking at this, I think Nasdaq is probably going to be much better than the US 30, but Dow Jones Industrial Average is probably going to get hammered here. It's not looking great. That kind of rejection there, especially if it closes like this on the early time frame, is not that great. Nasdaq, it's testing at least it's testing the Ichimoku cloud, right? But the Dow Jones is not even there yet. We're not even touching the Ichimoku cloud. Nasdaq at least is testing it, but it has reached resistance 1. It did spike a little bit higher. I think Nasdaq is in a much better position than the Dow Jones. The S&P 500 is probably not in a good place as well. But Dow Jones says it's definitely not in a good place looking at that kind of rejections in a market like that. All right, let's move back and see whether or not we can actually do something. I don't think this is tradable. We're not looking at a huge sell-off in the market. We're not looking at people picking it up as well. I think everyone is just confused what is going on. I think there was a lot of stuff that got triggered. Volume is dropping down. Not looking at volumes happening in the market. The Aussie USD is flat. New Zealand USD is flat. The Canadian, it's there as it is. The Swiss, it's pretty much flat. I think I like going long again on the sterling, but what can I target the sterling for? Because I think 1.2930 is basically where we might see the cutoff. But if we go by the fibs here, that's basically it. It's a 161.8% over there. We already reached 127.2, so whether or not it's a good idea to start buying it at the current price level, I'm not sure, because that kind of rejection, that kind of wick, it just tells us that, hey, there's a lot of sellers out there just waiting to get out, right? Either as a short-term profit taking or whatever not. But initially, after the initial rally, we didn't actually see sustained move higher on everything else, because if you take a look at the 1-minute time frame or the 5-minute time frame, you can see the initial spike and then the market just comes crashing down. It's not really pushing up any higher or anything like that. So yeah, not going anywhere. Unfortunate, but it is what it is. I would rather be safe than sorry. Typically I would be thinking about the fate, but we'll see what happens. If the hourly closes with a wick like that, then I think that's a telltale sign that the US dollar could actually be getting stronger. And obviously the equity market is doing pretty badly at this point in time. right? I think it even hits that order block up top. And yeah, it's not that great. That was yesterday. That was the breakout we were looking at yesterday. So we had a breakout, and basically price is basically testing that level where we broke down yesterday on the US 30. That sharp rejection there, doesn't bode well for the market today. But the Nasdaq is all right. It's not that bad. Yeah. Look, I think the sell-off on Nasdaq in terms of percentage base, um, it was it was bad, right? I mean, the Dow Jones dropped a lot more in terms of points, but percentage point, the drop in Nasdaq on Monday, that was the biggest drop after 2022. So it's much larger than the December drop on Nasdaq. So this one here is due for correction. I think Nasdaq could actually gain a little bit. I'm not quite sure about the US 30. I think we might see the Nasdaq diverge a little bit from the US 30. We might see the tech stocks rally up a little bit, but the Dow Jones and the S&P 500 might not be picking up. Just looking at the price action that we have here, this is not giving me any confidence that uh, you know people are happy with the lower inflation number at this point in time. We still need to look at a breakdown of the inflation numbers here, but we'll see what happens. Gold's not moving anywhere, so I would I would advise caution on gold if you're trading gold. I mean, it might get a little bit choppy on gold. Pound USD is not picking up. Euro USD is starting to come down, but we're not looking at a significant drop in the market there. Dollar Swiss is picking up, so the buy some Dollar Swiss and the sell some on Aussie USD. I'll keep those two. Just because I'm actually negative on the Aussie itself. And the Dollar Swiss, if it does break 88.45, 88.50, and I think we might actually see a little bit of a sustained rally. But yeah, sterling and the euro, no, not too confident. If I leave the position open just now, it would actually just hit our stop loss. So, oftentimes we need to decide when to get out. I think it was a good decision to get out just now. Okay. Is there a connection issue on my side? It's looking like it's cracking up on my side, but streaming looks good. From a weekly perspective, it touches the 61.8% Fibonacci level on Nasdaq. It actually did. It actually touched 61.8%. So yeah, but that's, we're talking about a weekly, but we're not looking at a floor yet on Nasdaq at this point in time. Oh, could go 19,000. I don't know. It should be picking up, but we broke too many supports in the past 2 weeks that I'm not even bothered with picking bottoms. We'll see what happens. If tonight we'll see the market pick up a little bit, then yeah, I think we might see a little bit of a floor, but Trump could change that every other day, so you just need to be on your toes on that one. I think it can actually be another red day, so just be very careful on this one here. I'm not sure whether or not that's going to be the case. The market's going to open in about 30 minutes time. We might see the market pick it up because the logic here is that bad news is actually good for the equity market for now, because market was anticipating that with this kind of number, the Fed could actually come and save them by cutting interest rates a little bit earlier, maybe earlier than June, because inflation is down a lot faster. That's basically what the market is waiting for. But it is what it is. We're not looking at a lot of sustained movement here on the Euro USD and the Pound USD after the news. So yeah, we'll see. ADP, I'm not too concerned about ADP, right? ADP is private payroll anyway, so it's never a good gauge anyways. So ADP, I'm not too fast, but the NFP numbers from the BLS, that's the one that we need to focus on. And I think from that number last week, we don't have that volatility when we traded last week. But overall, I think it is a positive gain in the number there. So labor market is still pretty okay. Unemployment going up by 0.1%. I don't think that was a big deal. But this, again, as I said, before the news gets released, if we get a negative number, it could actually be good for the US dollar. It could actually be good for the equity. It's good for the US dollar now, but we're not looking at the same thing on the equity market, which is concerning at this point in time. Dollar is actually gaining. Pound is flat, right? If it closes like this, we're gonna get a doji on the sterling here. We got 2 minutes left. It'll probably close with the doji on the sterling. The euro, I think this is probably gonna be, it's gonna be down, but whether or not it's actually a good idea to short it, I'm not quite sure on the Euro USD. But yeah, I'm looking at the Euro USD to fail, but I'm just waiting for indication or confirmation, at least on the daily time frame. The hourly time frame is already dropping down as it is, and if you go by the fibs, I think we are at about 50% retracement. Jumping in right now opens up to a 1-to-1 risk reward ratio. If you try to aim for 127.2, that would be the max in terms of where you can actually aim for, because that we have that floor over there. But at 161.8%, we're not looking at anything significant. So if you are aim for 127.2. That's about 1.08. Is it worth it? I don't know. But yeah, I think the euro could come down. And this is something that we have been anticipating since last week, that the euro should come down. And hopefully that's going to be the night tonight. But everything else, not happening. Not too convinced with the dollar yen as well. I think there's a lot of concern there. Aussie USD, again, it sells up, I'll keep it. Dollar Swiss sells up, the buys up, I'll keep it. New Zealand USD, dollar Swiss, dollar Canadian, I'm out. Gold is stuck at the range as it is. 3 times cut this year? I don't think so. I don't think we're going to be looking at a 3 times cut. Because the FOMC, the argument for the FOMC is if Trump goes crazy on the tariff, it could really hurt. It could really push inflation up a lot, right? Core inflation might stay stable, but the headline inflation, the CPI number, could actually goes up a lot. Index should have some pullback. I think the numbers should be positive for the equity market. Nasdaq is showing okay. I mean, I'm okay with Nasdaq. I think Nasdaq, we're going to be looking at probably an okay day for Nasdaq. The US 30 questionable at this point in time, because we're still below the breakdown from yesterday. So just keep that in mind. Just need hourly time frame below cloud for ideally that would be a much better confirmation. As it is, it's going to be tough. We just closed the hour anyway, and we're not going anywhere. It's not that great to just jump in blindly. But yeah, again, this is going to be the code for you guys, Non-Farm 2025. Before we wrap up the session for tonight, not as beautiful a month in terms of our news trading for this month. Last week we didn't get volatility. Today we get kind of a little bit of a fake out in the market, and then everyone just comes back to range there. We're not looking at anything like that, but it's what it is. Sometimes it happens when it comes to news trading. But again, this is the code. It's Non-Farm 2025. Before we wrap up the session, any last minute questions that we have here. But yeah, if you want to monitor the trade tonight, I don't think sterling is coming down as of yet. The euro might come down. The dollar yen could continue to push up higher. I think the dollar yen, dollar Swiss could actually push up higher. Nasdaq, I think it might actually be a good day for Nasdaq. The US 30, I'm not quite sure. We'll need to see what happens in 28 minutes when the market opens. It might be able to gain a little bit just because of that lower inflation number. It should be beneficial for what the market is wanting, right? The market needs the FOMC to start moving with interest rate cut earlier. That could be beneficial. I don't know whether this is actually the turnaround the market is waiting for or whatnot. All right. Okay, guys, let's wrap it up for this month. Good luck with the trades for today. and I'll see you next month.